Hey, good morning, everybody. It is John Lone King. It is Friday, the 7th of August, and here we are with a rate update. So summer is coming to an end, depending upon where you're at. It is back to school time, and the market is coming back. So we often see a little bit of a drop in the market in late June to July as everybody's out on vacation, whether it be buyers and sellers or realtors. We've got kind of a slowdown. And then we see that market pick back up into the fall. And so we're kind of hitting that peak as we're heading into the second half of the year. So let's kind of talk about what's happening right now. Really big news this morning. What a difference a week makes. Last week, we hit kind of the high end of where interest rates were. The Fed was talking about raising rates. Hey, inflation and the war, major problem. And the jobs market was super strong. And that has the Fed, again, Fed cares about two things. They care about strong job market and low inflation. And inflation is not low. So their only problem was inflation. They didn't have a problem with the jobs market. But today's jobs report changes everything. So today's jobs report, we're expecting 80,000 jobs created. So every single month they look at last month's numbers and they say, hey, how many jobs were created or lost during the month? Now they're estimating. And those estimates get revised month after month. And so they're going to post the July number, but then they go back and they revise the June number and they revise the May number. And so the number for July was estimated to be $80,000 80,000 jobs created. Now, mind you, a year ago, the target was around 200 to 300,000 jobs created. Now the Fed says, hey, no big deal. We expect 0 to 50 to 80,000 jobs created a month. That's the new normal. So they've reset expectations. Guess what? We lost 23,000 jobs last month. Now, that's from a lot of factors, but that was a huge miss in what the Fed is expecting. And now the Fed is kind of saying, oh, maybe we have two problems. Maybe both the things that we care about are problems. And I'll explain to you why that matters in just a second. But more importantly, the Fed has revised the numbers down significantly for the prior 2 months. So it takes 3 months for them to confirm the numbers are right. So every month after they issue the first report for that month, they revise and they revise again. Well, the June and May numbers were revised down another 103,000 jobs lower in created jobs than what they expected. That's another really big indicator that maybe the job market isn't as strong as what the Fed thinks. So is this bad news actually good news for mortgage rates? Maybe. So remember, I talk about this regularly. If the job market is tough, the Fed is going to lower interest rates to get companies to have more free money to spend to develop new factories, to produce more, and therefore they're going to hire more people. So to get the job market back up and get more people hired, if there's a lot of people unemployed, they're going to lower interest rates. But lowering interest rates causes inflation to take off because access to easy money means people are going to spend money a lot more, and therefore it's going to cost more money to buy things. Inflation is simply too many dollars chasing too few goods. That we have too much money in the economy that is free money that people are going to say, gosh, I got nothing to do with it. I might as well spend it. And that causes the price of things to go up. So now we've got kind of a problem that the Fed's going to say, look, I don't know whether this is going to be good news or bad news for rates. What I do know is up until today, pretty much everything was bad news for mortgage rates. And we've been seeing rates move up. So this is good news in that at least it's balanced, at least it's something that is saying, hey, maybe the Fed isn't so positive they're going to raise interest rates multiple times over the next year. Maybe they're going to stay flat. So we've got a big teeter-totter, we've got a big tug of war, but the fact of the matter is this was a good move for our side, for the good guys, for wanting interest rates to start coming back down some. But again, don't celebrate too much, because we're not going to have low interest rates immediately. We're just kind of stemming the tide of what's been happening over the last month, which is since beginning of July, we've seen rates moving up. So hopefully now they're going to flatten, maybe come back down to where they were a month ago. We don't know, but it's certainly a good sign. But the Fed's dilemma is, what are they going to do? Are they going to raise rates? Are they not going to raise rates? They've got a tough task at hand, and we have to wait and see what they come out with. So what does this mean for home buyers? The truth is, it's no different than what I've been saying, other than opportunity, opportunity, opportunity. We have been I have been seeing more price reductions where sellers are lowering the prices of homes. And that is really good news for home buyers. The truth is, two things that are going to make affordability better. Okay, three things. So you've got affordability is really, can I afford this house? And that became a major problem over the last few years because interest rates have shot up and house prices did not come down. So those are the two things that everybody thinks about. Well, gosh, the only way to make a house more affordable is if interest rates come down and or house prices come down. That's true. And we're seeing a little bit of both. We've been seeing rates come up. Now we're seeing them maybe have some reason to come down a little bit. We're seeing some house prices coming down a little bit. So that's really good. And those are the two most direct factors that people look at that will help affordability. Here's the one nobody pays attention to: time. The longer we are at a stable level, even though rates are high and house prices are high, the longer we stay at that stable level, the better your income catches up. Because for most of us, we're getting pay raises every single year. So you're going to make a little bit more money and a little bit more money, which means, hey, your payment is a lot higher than what you wanted it to be. Cost of everything is a lot higher than what you wanted it to be. But as long as it doesn't keep going higher, that jump gets caught up over time because your income comes up. And now, even though that number is really big, it doesn't feel as big because your income is catching up. And so affordability is solved by rates coming back down, housing prices coming back down. The problem is when rates come down, prices are going to shoot up. So that's not the solution we're really looking for. Time is on our side. The fact that it's taken multiple years of this market where 2022 rates started going up, if it would have come back down immediately, prices would have kept shooting up and it would have been an even worse situation. So the longer that we're kind of in this balanced area, the easier it is for wages to catch up. I know that doesn't feel like a good answer, but it's the truth of how the market corrects itself. It's the same reason why our parents bought homes, 30, 40, 50 years ago, and they were paying, $30,000, $50,000, $100,000 for a house, and that felt very expensive to them. Now we can spend $300,000, $500,000, $1 million for a house, and it's like, well, gosh, I wish I could buy it 30, 50, or 100. It's perspective. Your incomes have gone up, and therefore that monthly payment has gone up significantly, but so has your earning power, and that's what makes it still be affordable. Okay, so I want to shift to mortgage options. So I regularly want to talk to you about scenarios. Last week I talked about business owners. Today I want to talk about people who are paid in cash. I had a client recently who came to me saying, John, I know the answer is no, but I want to ask anyway because my wife really, really, really wants this house, and I need to figure out a way, is it even possible? And I said, well, tell me your story. And they said, well, I've had this job for the last 15 years, but my employer and I kind of have an agreement, and well, I'm paid in cash. Like I don't get a paycheck stub, I don't get a W-2. I'm paid in cash. Like I work and I feel like I can't buy a house because I don't follow all of the rules, and people with bad credit are able to buy houses and all this other stuff. And why can't I buy a house? And I said, I agree with you. And I actually have a solution. And I explained to him our verification of employment only program. Now, this program is not for everyone. It requires good credit, at least 680, and it requires you to put at least 20% down. But if you meet that criteria, I don't need to ever see a paycheck stub. I don't need to ever see a W-2. I simply look at what the employer fills out in the form of saying, hey, yeah, this is what I pay you. Now, that's between you and the employer. Some employers are saying, I don't know if I want to write that down because we're kind of doing this off the books. That's up to you guys. The truth is, the reason why you need to do it is none of my business, but his employer was willing to do it. His employer said, absolutely, I will do that. They filled out my form as a one-page form, and they're in contract to buy a house right now. And it was because we have scenarios that fit common sense. And there's a lot of people who maybe they do get some of their pay on a W-2 and a paycheck stub, but they get bonuses or other pay or other compensation that is paid outside of the normal paycheck stub and W-2. But their employer is going to confirm, yes, you do really earn that. Your bank statements confirm, yes, you really do deposit that money. Then logic says I can do it for you, and we can. And so that's just one more example of how we look at things differently. And I have a lot of common sense programs that can help you to be able to purchase a home. And that's really my theme as I talk to you every single week. Hey, Kathleen. I got a big high five here from Kathleen. So that's my theme. Every single week, I want to give you an idea of something that we can do. And today's theme is no more pay stubs, no pay stubs or W-2s. I still have an option. Again, it's not a down payment assistance program. It's not for low credit, but it's really a way for us to find solutions. And that's what I want the theme to be, is if you have a common sense situation, somebody may have said no, you've talked to a lender before, you've talked to a realtor, and they said that just can't happen. Don't take that answer as the final answer. I have so many resources, so many ways of looking at things. Maybe the answer is yes. Maybe the answer is not yet. I never, ever have said no to somebody. I've only said not yet. It's going to take more time. Here's the steps that you need to follow. Here's the tasks that I need you to complete. And once you do these things, we can relook at everything. So trust me to guide you. Trust me to give you all of the options, but most importantly, trust me with all of the information, because so many people don't tell me about that cash job that they've got on the side because they're like, there's no way you can use it, so I'm not going to tell John about it. And then you don't get qualified at all. So please open your kimono. Show me everything. Maybe don't open your kimono for real. My wife wouldn't appreciate that. But tell me the whole story so that I can help guide you and see what options you have. And let me help you make your homeownership dreams come true. Thank you so much for listening. Hope you have an absolutely wonderful week, and we'll talk to y'all soon. Bye-bye.